But yeah, if you're looking to buy physical, I think this is a fantastic time. And junior silver mining stocks are also extremely undervalued. Junior silver miners are the most undervalued component of the whole precious metals complex. And I think they're presenting the most attractive risk-reward opportunity right now, the junior silver miners.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Steve Penny from the Silver Chartist. And our affiliate link is silverchartistliberty.com. Steve, thank you so much for joining us today.
You bet, Elijah. Thanks for inviting me back. Always fun to speak with you and look forward to a good conversation.
Definitely. Now, it's what we've been seeing in the precious metal markets is quite interesting. We're seeing quite a bit of a pullback after that rally following the Russia-Ukraine war and the invasion there. We're seeing, it seems like, just precious metals fall right back to where they were. A little more strength in gold than it seems like silver, but your take on where we are right now.
Yeah, and I've got some charts to show here in a minute too, but just I'll start with some big picture thoughts. When we had that big run up in gold towards 2078, I was saying, you know, these spikes that happen in conjunction with geopolitical unrest typically reverse in short order. But I do think the trend has reversed, and I'm standing by that in gold. And I think I'm still looking for higher highs and higher lows going forward. And going back for the last month, I've said as long as we make a higher low above 1780 in gold, we're in an uptrend. And just above there, I'd like to see the 200-day moving average hold, which is at about 1835. So as long as we're above those two numbers, those two levels in gold, we're in an uptrend. And this is, you know, it's just part of riding a commodity bull market or a gold and silver bull market is volatility, and it's usually most amplified to the downside. That's just the price of admission.
Before we turn to the charts, if we could kind of discuss the Fed rate hike, like they are thinking of possibly a 50-point rate hike. And I know a lot of people are talking about how this could be really bearish for gold and we could see a big downturn in the stock market and precious metals. Why do you think that won't be the case? It seems like you're saying the lowest gold will hit is maybe the high 1700s.
Well, that's my baseline expectation. I like to say I deal in probabilities, not predictions, and I think that's the highest probability outcome is that the uptrend holds. And markets are forward-looking. By the time we get to the news actually happens. Usually, 9 out of 10 times, it's already priced in. So I think this rate hike cycle is pretty much fully priced in here. And we're seeing that in yields. We're seeing that in metals and commodities pulling back. So I think what's about to happen next week and over the next few months is already priced in.
If we could turn to the charts now and see what is happening specifically in the gold market.
Sure. And, you know, it might be a good place, if it's okay with you, just to show a chart of that 10-year yield. I think that's the most important thing to watch right now is the bond market. Here's the 10-year note, and this is critical right here. This chart goes back to 1980, and you can see that yields have been steadily declining for 40 years. In other words, it's been a 40-year bond bull market, and we've rallied sharply. Yields have spiked sharply off of this 0.4% March 2020 low. I really believe that marked the peak of that 40-year bull market, this blow off top, depending on how you look at it, you know, blow off, you know, kind of bottom in yields, but in the price of bonds themselves. And where are we right now? We're poking our head right at this 40-year resistance line. And RSI is extremely overbought. It hasn't been this overbought going back decades. So I think what's probably likely here, like I was saying, this rate hike cycle is pretty much priced in. And I'm looking for yields to pull back a little bit, although I think the trend is higher. We're due for a counter trend, you know, pullback. And I think that's going to, you know, coincide with a bounce in the metals and commodities here over the next few weeks to couple months.
So that's very interesting. I mean, we have seen such a pullback in precious metals, but you're saying in the weeks and months ahead, we could see a bounce back.
Yeah, exactly. And now I can pivot over to that chart for gold. And this is what we were talking about before, higher highs and higher lows. You've also got the handle portion of that massive cup and handle pattern that most people are familiar with by now. There's a big cup pattern that started in 2011, and this is a textbook pattern. And what you see right here is the handle portion of that cup and handle. And where do we bounce this week? Right here, right at the right edge of that handle pattern. So I think this support's going to hold. Initial support here is 1880, but below that, if you go to zero in on the daily chart, you can see that 200-day moving average right here, about 1835. And then there's 1780, which is that previous swing low. So those are the support levels I'm looking at. Right here at 1880, 200-day moving average 1830 and 1780. And that's happening in the confines of kind of a shorter-term triangle pattern that you can see on the chart right here. And that pattern should resolve no later than midsummer. So I could see us consolidating in here for up to a couple more months before my bias is to the upside, before an upside breakout.
Now, if people are looking to add to their position, would you say now is a good time, or that we might want to, wait for a lower price?
I'm glad you asked that, because it's important to have an accumulation strategy. There's no one right strategy for everyone, but it's important to have one instead of, if you ask a lot of people, hey, what's your accumulation strategy? They don't have one. So like for physical metal, for me, I just dollar cost average every month. I'm not worried about the price. But when I'm looking to buy mining stocks, my strategy is to buy sharp pullbacks to key support levels and scale in with multiple purchases. And I think now is a fantastic time to do that. In fact, I just added to my own mining stock positions yesterday, and that was the first time I've added in quite a while, because we had pulled back to some nice support levels. And then, if you're short-term trading, that's probably not most of your audience, but that's where I like to kind of buy breakouts from technical patterns. But that probably doesn't apply to most people.
I think that's so key to have that strategy, because then in that case, you're not just acting on emotion. You know what you're going to do and when you're going to do it.
Yeah, if you ask a lot of people, they'd say, yeah, I like to buy pullbacks to support. But what happens is they buy when things are running away to the upside, which is not, if you have a strategy, you've written it down, it'll keep you from making those kind of mistakes. Where do most people, retail investors, buy? Up here in the last couple months here. That's when everyone wanted to add. Down here, where we were like yesterday and the day before, how many people are looking to add to their mining stocks? I know there's some, but typically retail likes to buy it near the top, which is unfortunate.
Now, when it comes to silver, what are the key support levels there?
Yes, silver, I mean, the chart, it's just ugly. You can see this sideways range going back to 2020, that peak we had. We're just chopping right sideways, right in the middle of that range. I was encouraged here by this little arc pattern that had formed. And I thought we're going to run up to closer to 28.50 to 30 before this pullback. I was wrong on that. But, last week, the first warning signal was this big bearish engulfing candle on the weekly chart. That's just an ugly looking candlestick. So that kind of signaled we might see some more weakness this week. And sure enough, we've seen that. One thing that might be a little bit encouraging is we're seeing open interest kind of flooding out of silver and gold. And that indicates the bankers are covering their shorts at a very rapid pace. So I think we're probably much closer to a bottom than a top here. But, a little bit more weakness wouldn't surprise me in silver. And just like gold, silver is forming its own little triangle pattern here. This is a smaller pattern. It's below its 200-day moving average, but I can see it kind of chopping sideways in here. And just like gold's pattern will resolve by midsummer, same thing for this triangle pattern. And my bias is to the upside. And I'm not a perma bull. If there were reasons to suggest it was going to go lower, I would tell you what I think. But I think I'm looking up in silver, and I think we're much closer to a low than a top.
When it comes to the kind of buying the dip, then this might be a good time for people to scale more into silver?
Yes, absolutely. Same comments apply to gold that I made about the dollar cost averaging. But yeah, if you're looking to buy physical, I think this is a fantastic time. And junior silver mining stocks are also extremely undervalued relative to even junior silver miners are the most undervalued component of the whole precious metals complex. And I think they're presenting the most attractive risk reward opportunity right now, the junior silver miners.
If we can move to the mining stocks in particular, the large ETFs, what is your take on them right now?
Sure. And by the way, since I mentioned it, here's that chart comparing SILJ, the junior silver mining ETF, to GDX. You can see where we are. This is actually a bullish descending wedge pattern that's forming in that ratio. And once you break out to the upside, you typically get a pretty sharp move. But just if we go back to where we were in 2016 on this ratio, that would mean junior silver miners outperform GDX, the senior gold miners, by a factor of 2. And I think they'll probably outperform by even a wider margin over the next handful of years. But GDX, here's the chart for GDX. I talked about that bearish engulfing candle on silver. Well, GDX had its own last week. And I mean, that's just an ugly, ugly candlestick on big volume. We came down, tested the $35 support. So that's encouraging that we're holding right above that $35 level. And I don't have a chart for it, but the 200-day moving average is not far below either. So you got a nice confluence of support there. Could we go back, pull back just a little bit more in GDX? Certainly, but I think just like silver, we're probably closer to a bottom than the top.
Now, when it comes to, I guess, investing in the mining stocks, what are some of the advantages over the physical metal? Leverage,
but leverage cuts both ways. They're much more volatile, and then there's a lot of additional risks too. Jurisdictional risk. These greedy governments are the mining stock, are the miners going to get their permits they need? Are their drill results going to be as good as the market expects? So there's all kinds of risk, but there's tremendous upside too in these mining stocks. I do think silver is probably going to go to 300 in the next handful of years over the longer term. But I think if you're looking for like 5 baggers and 10 baggers, that's where you find that kind of leverage in the junior silver mining stocks.
No, it is difficult though to pick the right miners, right? So what kind of leverage do the ETFs give? So
here's my kind of going from least risky way to play the mining stocks down to the most risky. And this is really important to know if you're new. I think a lot of people may know these things, but I look at ETFs as kind of like the least risky way to play because you get a diversified basket. So if a couple of mining stocks fail, they go to zero, well, you've got a broad diversification. The next way, safest way, and this is my favorite way, is the royalty and streaming companies, the Franco-Nevadas, the Wheaton Precious Metals, the Sandstorm Golds. There's a handful of them. I think they offer the second most favorable risk-reward ratio. And then, of course, you got senior producers, junior producers, explorers, and developers. And one thing I see with newer investors is they're always drawn to those explorers and developers. And there's nothing wrong with that at all. But as long as you understand the risks associated with it and you've done a proper cost-benefit analysis, does it fit your risk profile? For me, I like to have about 20% of my portfolio in those explorers and developers. And that's where you have your 5 and 10 and even 20 bagger potential. But there's also more risk.
And when you're talking about 20%, is that for the precious metal component of your portfolio?
Yes, I'm glad you asked that. Because a lot of people just make the assumption like, hey, you're all in on precious metals mining stocks. There's nothing wrong with that as long as you've, again, counted the cost. So I think of your whole financial plan or as a pie, and then you decide how much of that pie you want to be in these sectors. And then of that component that you've decided to put towards precious metals mining stocks, decide what percentage of that you want to be in, top tier royalty plays, senior producers, junior producers, explorers, and developers. And for me, the portion of my overall financial pie that I've put into precious metals mining stocks, of that portion, I put 20% in explorers and developers. That's not right for everyone, but that's right for me.
And when it comes to one of the other markets that we do look at is actually the dollar, because that can give an indication what precious metals might be doing. So could you share with us what the dollar is doing at the moment?
Yeah, the dollar has just been on a tear. And when you see the metals and the dollar rally in unison, like we saw recently, gold and the dollar rallying together, it's usually a sign of a fear trade, and we saw that with the geopolitical tensions. But look at the dollar right now on this long-term chart. This goes back to 2009. You can see the significance of this 103 area. Peaked at 103.82. That was a multi-decade high back in 2016. We poked our head a little bit above that just yesterday. So this is major resistance. And you can see that RSI here on the monthly chart is getting extremely overbought. It's the second most overbought in this whole time series here, going back over 10 years. So I think we're due for a pullback in the dollar. But that said, the trend is up. There's no denying that. You can see this zoomed in a little bit closer on the weekly chart, just going back a couple of years, this resistance. But we're in an uptrend. That doesn't mean we're not due for a pullback. So For the dollar to be back in a downtrend, I'd be looking for a weekly close back below the 200-day moving average. And that's still a ways to go, but we're due for a pullback here in the dollar. And I think that'll coincide with a bounce in the metals.
Can you share with the viewers what kind of indication the US dollar really gives to precious metals? Because some people are skeptical, especially the US dollar index being so heavily weighted in the euro. It seems to be kind of a more euro proxy rather than kind of a true indication of the weakness or strength of the dollar.
Yep, 100% agree with that. It's not a perfect inverse correlation. Some people think, hey, the dollar goes up, metals go down. It's not a perfect correlation, inverse correlation. However, here's how I think about it. It's either a tailwind or a headwind. You can still move forward with a headwind or a rising dollar. And so it's just which way is the wind blowing? It's kind of how I think about it. But you're right. All it does is measure the strength of the dollar relative to a basket of 5 or 6 other fiat currencies. I think 6 total. And the euro makes up the vast majority of that. So if you've got 6 currencies, fiat currencies, that are all falling, losing value, but the dollar is falling a little bit less slow, it's going to show relative strength, but it's still losing purchasing power. So that's how I think about it. I don't put too much stock in it, but I track it just to see which way the wind is blowing.
All right. Well, Steve Penny, we really appreciate your time today. Before we let you go, where can our viewers find you? And did you want to share with the viewers any last thoughts you had?
No, I think we covered it all, but I will say that we just launched a brand new website. We've got a mobile app and much more community engagement. So we're got a lot more value to add. You can check that out if you like at silverchartistliberty.com. And that's where you get real-time alerts. You get mining stock analysis from Jeff Clark, commentary from David Brady, community aspect. We do mastermind call strategy sessions. There's a whole lot of things going on over at silverchartistliberty.com.
Fantastic. And a reminder for our viewers, anyone who uses that link, silverchartistliberty.com, will be able to sign up for Steve's newsletter. And if you do sign up for the premium newsletter, that's supporting Liberty and Finance along the way as well. So Steve, once again, thank you so much for your time and God bless.
Thanks, Elijah.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.